Please help this channel grow by hitting like and subscribe.
All right, let's dive right in. Today, we're taking a close look at the EV stock NIO. And it's a really fascinating one right now because the technical charts are basically telling two completely different stories. So we're going to unpack what that means for its next big move.
So the story really starts right here. A single-day drop of over 4%. And that's not just a little bit of noise. That's a pretty significant move that has traders on edge and really sets the stage for our entire conversation today.
Now, on the surface, the immediate takeaway seems pretty clear, right? A drop like this, especially with its recent performance, it just paints a negative picture. It really feels like the sellers have grabbed the steering wheel and are in full control.
But is it really that simple? That's the big question we're asking. Because when you start to dig just a little bit deeper, some very unusual activity starts to pop up that doesn't quite fit the narrative.
Okay, first things first, let's build the case for the bears. We really need to understand why the outlook looks so weak on the surface and why so many of the classic indicators are flashing red.
So the first piece of evidence is a classic bearish signal. The stock's price is sitting below both its 50-day and 200-day moving averages. You can think of that 200-day line as a long-term health indicator for a stock. And being below both, that's textbook stuff telling you that sellers have the upper hand.
Now, this is what's really interesting. It's the speed of this momentum collapse. Just 5 days ago, the relative strength index, the RSI, was actually looking pretty bullish. Now it has absolutely plummeted below that key 50 level. That tells us that buying power hasn't just gotten weaker, it's pretty much evaporated.
So, let's sum up the bearish case. You've got weak price action, momentum has completely fallen off a cliff, and it's all happening while the whole EV sector is facing some headwinds. And to top it all off, the general analyst consensus is leaning toward sell. It's a pretty compelling argument for the bears, for sure.
But here comes the plot twist. Just when the story seems totally straightforward, one indicator comes along that contradicts almost everything we've just looked at, and it points to a completely different story happening behind the scenes.
And this is the core conflict, right? The price is clearly going down, which, that should mean more people are selling than buying. But is that what's actually happening when you look at the volume behind those trades?
To answer that, we have to look at something called on-balance volume, or OBV. Honestly, the best way to think about it is like a detective. It doesn't care about the price noise, it follows the money. It tracks whether big volume is flowing in or out of a stock. It's looking for the footprints of the big money players. And would you look at what our detective found? Over the last 20 days, while the price has been struggling, the OBV has surged a massive 81%. This is a huge disconnect. It's just not what you'd expect to see.
So here's the crucial point. This kind of pattern often means that while smaller, everyday retail investors might be selling off, the larger, informed buyers, what people call the smart money, could be quietly buying up shares, anticipating a future move higher.
So this conflict, right, the obvious price weakness versus this hidden buying strength, it creates a really clear battleground. So let's map out the exact price levels where this fight is about to play out. Here are the 3 most important levels to keep your eyes on. Now, the first 2 are based on Fibonacci levels. They're just popular markers traders use. Down at the bottom, 471 is the critical floor that the bulls have to defend. Then, 492 is the first hurdle they need to get over. And that zone around 525? Yeah, that's the main boss battle, taking back that 200-day average to prove the trend has really changed.
And this slide just illustrates the path back for the bulls perfectly. It's not one giant leap, it's a climb. It's a series of steps. They have to defend that support at 471, and then they have to start the climb, one level at a time, to prove they're actually back in control of this thing.
Okay, so we've got the bear case, we've got the bull's secret weapon. Let's put it all together and map out the most likely scenarios for what could happen from here. It really all boils down to this. If that $4.71 support level breaks, the bears win this round, and that could easily push the price down toward its recent lows. But if the stock bounces hard off that level, especially with a lot of volume, that could be the very first sign that those hidden buyers are finally stepping out of the shadows to make their move.
And this chart really just sums up the confusion perfectly. If you look at a mix of 10 common technical signals, they are completely split down the middle. 4 are bearish, 4 are neutral, and only 2 are actually bullish. It just shows a stock that is in a state of total conflict, where the trend on the surface looks bad, but that underlying volume story is telling us something else entirely.
And that leaves us with the ultimate question.
With price and volume telling two totally different stories, you have to ask, is NIO at a breaking point, where the weight of this negative trend finally crushes it? Or is it at a turning point, where all that smart money buying is about to pay off? The answer is probably going to be decided right at that key $4.71 level.
The content in this video is for entertainment and educational purposes only and should not be considered financial advice. All investments involve risk, including the loss of principal. Please do your own research or consult with a professional before making any financial decisions.